Rahul, good afternoon. Thank you for joining us.
Thank you.
Rahul, I want to jump straight to the heart of the matter. We've spoken a lot about China. India, of course, a fascinating market, a lot of big numbers to throw around. Most populous country now, the world's fastest growing major market, a market where the number of millionaires are expected to double over the next 5 years or so. And yet, it's a tough market to crack. As the largest foreign private banker in the country, how do you view India?
Thanks, Jeanette. So let me set the stage when you say the world's largest or the most populous country. India has the second largest working population at 522 million. Median age, 29. GDP at 3.4 trillion. Keep in mind that the first trillion took 62 years, the second trillion, 8 years, the third trillion, 5 years. India is growing rapidly. There's wealth creation that's taking in place. The macro looks very, very good as you start to look broadly across the country. Even when you start to see wealth across different cities in India, 50% of the wealth is concentrated in the top 5 cities. 10 to 15% in the next 5 cities, and then another 15 to 20% in the next 20 cities. So it's pan-India that you're seeing the macro as well as the wealth creation take place. I'll give you some more statistics. India has 320,000 millionaires, 1,900 of which have more than 10 million in investable assets. You then have another approximately 119 or 120 billionaires in the country, right? And I would say that itself is growing at a very, very fast pace and slated to be in excess of 5 trillion in terms of financial wealth over the course of the next 4 to 5 years. So you've got a lot of wealth on the ground, and you've got obviously the macro that plays out well, which is why banks like us want to do more on the ground in India. Julius Baer has been in India through our legacy now for 30 years. We got in 2015, and we're just staying the course because the opportunity set is extremely exciting.
Rahul, you're not just staying the course, you have ambitious plans, of course. In the next 5 years, you aim to double your headcount on the ground, your relationship managers. You aim to triple your assets. India is also a market where we've seen cyclical exits of various banks and who are now returning. The local market is full of companies which are racing to hire relationship managers and talent, really. Is this time different, and why?
You know, I used to always kid and joke about India and say, India is the gift that never gives. It is giving now. As much as you're seeing the sort of wealth creation that takes place, keep in mind the wealth management which is being managed, or the wealth that's being managed by the organized wealth management sector is only 9%. In developed markets, it's 60%. In China itself, it's 20%. So the wealth exists, but it's not yet being managed in the manner that it should be managed. So that in itself speaks about the fact that there is that much and more opportunity on the ground. Yes, we are growing significantly in India. We've set for ourselves a 5-year transformation plan, and we're scaling this. We have 225 employees, and I'm going to talk a bit about the challenges about people, talent pool, so on and so forth. But just looking at this opportunity, you got to really be able to build scale in this business, and that's what we're looking at. Our ambition, we're in 7 cities. Ambition is to be in excess of 10 cities. Wealth, like I said, is growing across the country. So just not focusing on the top cities, tier 1, tier 2, tier 3. I'll give you some sort of recent anecdotes about how you're seeing this sort of actually play out. I was earlier this year at a wedding in Udaipur, small city, and staying in one of the sort of nicer properties over there. And I was going back to that property after a good 10, 12 years. When I went there 10 years ago, given the tariff that you're paying in at the hotels, roughly 85% of the guests were foreigners. This time around, 85%, if not 90%, were domestic Indians. They were locals. They're traveling out over there. They're consuming, and they're actually investing. So you got to see this in the sense of as to how large that opportunity is on the ground.
I was on a holiday in Goa, Rahul, just before I came to Hong Kong. And my hotel room in Goa cost me more than my hotel room in Hong Kong. And again, all Indians consuming at the resort, which takes me to another striking number when it comes to the India growth story. About a decade ago, when we saw a flurry of exits from the wealth space in India, there were only about 10 cities, the usual suspects, Bombay, Delhi, Calcutta, which boasted people of ultra-rich Indians, you can say. Today, there are almost 100 cities with ultra-rich Indian citizens. But that also leads to challenges in the sense of how do you tap that wealth? What are your plans?
So the way you really want to do this is you cannot really go out and say, I want to be in 100 cities. It's difficult. The clients on the ground do want you closer. So they want to know who you are, what's the culture, are you here just peddling a product and into us, and how you're coming to us when we need you on a regular basis. So the strategy for us is a hub and spoke model. You have a hub in Delhi, and you have spoke outfits, whether it is Jaipur, whether it is Lucknow, whether it is Chandigarh, and you manage it in that manner. So you have small spoke offices, but the hub becomes Delhi, and the same thing you do across in markets like Mumbai, so on and so forth. So that's when you're focusing on the high net worth segment. So that's everybody, say $1 million plus. When you look at that affluent segment, we're not in that affluent segment, but that affluent segment is growing exponentially, right? So approximately when you look at the total wealth pool, 50% is really in the high net worth, or 55%, 45% sits below the high net worth segment, of which affluent is a big chunk. The way to play India on the affluent side is through a hybrid model. You cannot be physically in these locations, so you got to do both digitally as well as certain brick and mortar in some markets. So that's a hybrid play, and you can see a number of players that is actually in the space and playing that, and those are the ones that are doing a lot of it digitally. When you look at the high net worth space, you've got a number of foreign banks. Some have been there, some have exited, some are re-entering the market. The sort of only thing that I say is in India, you got to stay the course. You got to be patient. You got to build this over a period in time and just not try and do things from a profitable standpoint, which is why you see a number of the local players who have taken a clear lead in March over the foreign banks. Julius Baer is the largest private bank, foreign private bank in India. And I struggle when I say foreign because we're really local in on the ground. We've been there now for nearly 30 years through our legacy. So by the fact that we stay on the ground, that helps us. I'll give you some other statistics, which is interesting. We have 225 employees in India, growing at a fast pace, as you sort of said in earlier. 25% of those employees have been with us in excess of 10 years. 20% of those have been with us in excess of 15 years. That speaks to the fact that this is a business that you want to have people stay. And as you can see, the trends in wealth management, bankers change very, very quickly. So you want to stay the course in that sense.
And I'm presuming all your bankers speak in crores and lakhs.
You know, having brought up in India, done my education in India, and really sort of lived overseas for 30, 35 years, I yet struggle with lakhs and crores, etc. So for us, it's a very quick, easy sort of conversion to either Swiss francs or US dollars. But when you're on the ground in India, you got to speak that language. So it's important even as to how, for a foreign bank, we are really sort of local. We cannot really instill a lot of global policies, whilst those that are relevant but you got to run this business locally and make sure that you're managing the risk and governance. And the anecdote that sort of, we really sort of look at is we want to build the Hindustan lever in on the ground, the parent being Unilever. So in that sense.
At this point, I want to invite our audience to keep sending in your questions if you have any questions about this fascinating market called India. Rahul and I want to talk about now, we've spent some time with amazing statistics on the growth in India itself within the territorial borders. India, of course, also has a large diaspora. There are a lot of what we call non-resident Indians who see growth happening back home. They want to invest back home. What are the kind of questions that you're getting both from your clients within the country as well as your clients abroad who want to invest in India? And how does this interplay work out? What are the trends you're noticing?
So I think when you look at sort of the India landscape, you've got to look at it from a global India perspective. Onshore presence or onshore business in India, rupee-denominated business, rupee platform, catering to the needs of resident Indians. Then you have the global diaspora, 30 million worldwide, $1 trillion in investable assets across the globe, extremely successful community. And the fact that they're non-resident Indian, they always have had through, whether it's families, through culture, through sporting ties, i.e. cricket, through Bollywood, they've stayed connected with India. But the trend that we've seen now is as to how much more interested they are in investing in India. On an average, an NRI invest roughly 15 to 20% of their investable assets in India. Whether they do it through their offshore private bank, which means really the ability for a bank to be able to offer India-centric product on the offshore platform. So if I'm based in Hong Kong and I sort of invest locally in Hong Kong, Greater China, Europe, and the US, I also can invest in India. The second is that if I have rupee assets in India, I'd like to really sort of invest those assets. In the past, a lot of it was real estate driven. As an asset class, real estate is what everybody did. And now you're seeing a lot more growth coming in through the equity markets, through the fixed income markets. So that's where you see today a lot of people are investing in with firms on the ground in India, be it foreign players like us or be it the local bank. So that's really what we call the off to on. And then you have resident Indians who want to diversify. India has a scheme called the liberalized remittance scheme, and under which you're seeing on a monthly basis, 2 billion US being remitted out. And these are small chunks of 250K per individual. If you're a family of 4, you can remit $1 million on an annual basis. 2 billion, so call that circa 24 billion on an annualized basis. That's growing. India too allows and enables you through different routes, whether it's the ODI, OPI, NBFC, to be able to offshore yourself, to be able to keep wealth offshore for investment purposes. And that trend we're seeing play out now a lot more. So the banks that are able to connect the two, that are able to seamlessly deliver to the client a more broader portfolio with India exposure, or for resident Indians to come in and invest offshore, that's what matters. I'll say one other thing, Jeanette. I moved to Dubai, having spent 16 years in Singapore, and I can tell you, Dubai is really becoming the hub for the non-resident Indian community. UAE has a population circa 10 million, of which more than a third are people of Indian origin. We get to see a family of size, one a week, that comes in and wants to talk about, and there's families from India that want to be able to offshore themselves and do it all the legal way and do it with all of the regulatory, sort of within the regulatory framework.
Rahul, you've spoken about the regulatory framework. You also touched upon the love for real estate investing that existed in India earlier. At this point, I want to get into the audience question, somebody who really read my mind. What are the common red flags to avoid when investing in India?
So to me, I'll say the following. So first is really around the talent pool. People. As much as we say median age 29, 522 million people of sort of working age, the challenge that you have is getting people specifically in this industry who understand the space, who are trained. We are not looking for salespeople. We're looking for relationship managers who can advise clients on how to invest. We have a 132-year history as Julius Baer. So how do we really take that history, take that culture, take that understanding, and be able to sort of capsule that on the ground in India? How do we train our people? How do we get them to really understand what wealth management is all about? So that, to me, is extremely important. You're not there to come in and sell a product. You're out there to come in and educate. So education, extremely, extremely important as far as India is concerned in the wealth management space. The second is that the government, the rules and the regulations are evolving at a very, very fast pace. As a bank or as an institution, you need to keep pace with those. So you need to be extremely, extremely careful in the way you start to build your platform and make sure that you are really sort of adhering to the do's and don'ts in that country. So you have to be mindful of these things. And the third, which I said earlier as well, is you got to stay the course. Foreign banks have had, unfortunately, this history of coming in and then saying, wow, this doesn't work, let's exit. It's going to take time, right? So it is really sort of the hockey stick that sort of takes time, but you've got to stay the long haul. So that's what my advice would be to folks who are looking to invest in India. It's not a quick ride, it's not an easy ride. And I would sort of say this as well, that in India, keep in mind that you get emerging market revenue with developed market cost. So be mindful of that. The ROA in doing business, or the return of asset on the AUM in doing this business in India, is roughly between 40 to 60 basis points, depending on which segment you're focusing on. And if you look at it anywhere in the offshore world, it ranges between anywhere between 70 to 90 to 100 basis points. So be mindful of that.
A very participative audience today, lots of questions. That one's interesting. Which verticals do you see with the highest upside potential in India?
So I presume when you look at verticals, I don't know if it means which segment is it that we're looking at. Is it the high? Is it the ultra high? Or is it the affluent? The good news is that the growth that you're seeing is across all these segments. And I gave some statistics and numbers in earlier. So it's easier to meet at this point in time where the opportunity is really in the high net worth and above. In the sort of mass affluent segment, and call that anywhere between 100K to $1 million US, emergence of many players, lots of them digitally sort of driven, enabled, and they're trying to do a lot of things, a lot of freebies. They're not solving right now for profitability. They want to gain that market share. So clearly, quite frankly, to me, it's across in that segment. If you define segment as professionals, business owners, C-suite, where's that opportunity in as far as that sort of segment is concerned? Quite frankly, it's across the board. Another sort of anecdote I'll give you is I was at our year ahead outlook event on markets that a lot of the private banks do, and I saw a very young crowd over there, and I said, wow, it's really great to see that the patriarch or the first gen is passing on the baton now to the next gen. And I asked the team saying, great to see this happening. And they said, yes, whilst that's happening, what you're seeing over here is the first gen. These are the people that have made this money. They are very interested in understanding. Their investment pattern behavior is very different from that of the patriarch because they want advice. So I know I've digressed a bit, but I wanted to address that from a segment perspective as well.
In fact, I want to go back to that point because there was a question also about what is the significance of the population number? What is the significance of India overtaking China as the most populous country? Does this have any impact in terms of doing business in the country? Does this have any impact on how the world sees India?
I think the world sees India a lot different today than what it did in the past. Just not because India has become the largest, most populous country, but the fact in terms of the growth that you're seeing, the GDP growth that you're seeing. As is forecasted, we are today the 5th largest, and by 2024, India's slated to be the 4th largest, overtaking Germany. Now, these are predictions. I don't know if this is going to come right or wrong, and it's supposed to be by 2050, the second largest economy. So rather than looking at the predictions, I think what we got to see is you've got a lot good that's happening in on the ground. You're seeing a lot of interest coming in from not only the foreign institutional investor, but from local investors. When the FII flows dried up last year because of what happened in 2022, all of that was filled in by the domestic investor. So India has a large domestic consumption-led economy and wealth that is locally on the ground. So you want to be in a market where the size of the pie is increasing, rather than fighting for something and really trying to just essentially steal market share.
Rahul, India also arguably has a very thriving fintech sector, which could be a disruptor going ahead. There's also a virtual asset industry. There's a lot of interest. Dubai, of course, is becoming a big hub for this Indian interest in the virtual asset space. How do you see this as, or rather, do you see this as a challenge for the wealth management industry? Do you see these as potential disruptors to your business?
So like I said earlier, we're seeing a lot of that being addressed at the affluent space as of now. And as far as we're concerned, you want to make sure that you are running your business where you are really tech-enabled. You want to be able to have the best-in-class online platform, the best-in-class application. The people that you're dealing with want information instantly on the phone. They want to be able to really look at their portfolios. They want to be able to look at all of what you're suggesting in terms of, ideas. Your intellect needs to be all available on the ground, on the phone over there. And then you couple that up with advice. Make execution seamless. That's where a lot of the friction takes place and on the ground in India. But advice, a lot of that, whilst happens through there, people, at least for the segment that is high net worth and above, is what prefers being able to speak to an individual advisor.
We're running out of time, Rahul, so very quickly, what excites you the most about India and what keeps you awake at night?
I make it at least 10 to 12 times a year to India. I was in India last week itself, in Mumbai. We had our offsite in a small town outside Mumbai called Lonavala. Just the excitement that you see on the ground. When you go over there, you get to see and meet with clients, and I always make sure that I meet with clients. Clients are hungry. Clients are growing. Clients want advice. The next generation clearly is looking at advice in and from you rather than simply saying, give me the first and the second product, so on and so forth, right? They are also now getting a lot more ESG sort of, in their vocabulary, which wasn't the case in the past. Early stages, but they're getting in over there. It is extremely exciting, which is why many people are keen to look to invest in India. That to me is the sort of biggest excitement that I see. What keeps me awake is really the execution risk. The execution risk is something that you can never, ever undermine on the ground in India. So which is why we've set for ourselves a 5-year journey. You can't do this in 1 year, 2 years, 3 years. It's a 5-year journey. You got to get the plumbing right. You got to make sure you got platform, technology, branding, marketing, premises, leadership, distribution, all of that. So execution is what I would say, but in ending, what I would definitely say is it's a large market, growing at a fast pace. Wealth management is yet nascent with a huge potential. Capital markets are developing in on the ground. The product set on the ground is significantly more than what it was just a few years ago. And that's why it is so exciting for Julius Baer to be in India.
Thank you, Rahul. Fascinating conversation on this very interesting market that I believe has a lot to offer.
Thank you.
Ladies and gentlemen, to our fabulous audience today, thank you for your questions. And also, I'm pleased to say that lunch is being served. Please join us for lunchtime. If you are invited to the HSBC lunch, I would request you to go there promptly. Thank you very much for your attention.
Thank you.